How many of you have faced this issue? The market did well, the portfolio that you built didn't do as well. Honestly, there are a lot of psychological reasons for the same, and I have highlighted those in my earlier videos. In this video on You Should Know What You Own, I try to talk about 3 important points that you should all know why the portfolio that you're trying to build or your advisor is coming out with can underperform. Please do watch the video till the end. One of the reasons why your portfolio can underperform is because the fund manager has got a lot of investments in the trending sectors. It's human to look at trending sectors and not so much onto the underperforming sectors. So when your fund manager and his team of analysts start working on those trending sectors, they come out with those analyses which project a stupendous growth going forward. Therefore, your fund manager now may think that, okay, why don't I pay a slightly higher premium for the growth expected so that in the end of 1 year, 2 years or 3 years, this particular company that I'm investing in will end up benefiting my clients. There is nothing wrong there. Just that when there is a correction like what we have seen in the last couple of weeks, these trending sectors, these richly valued companies tend to correct first. And therefore, when you allocate your lot of money to a trending sector, you should pretty much expect that you will see good growth in the periods of outperformance. But when the market corrects, these very same stocks correct a lot, thereby pulling down your portfolio larger than the market. This is one of the key reasons why your portfolio can perform. The second and one reason which we investment managers ourselves forget many of the time is that to understand the risk the fund manager is taking to generate the returns. Now we all know that it is risky, but then fund managers, smart fund managers have the ability of picking good stocks at great valuations, thereby adding on to returns. And then there are also other set of fund managers who invest a lot in trending stocks, trending sectors, thereby giving returns in the first few months or few quarters, but then end up losing a good chunk of those returns or also capital in the longer run. Now you may question, how do I measure whether the fund manager is doing a great job, or is it because of the market risk that the fund manager is taking? Look for a number called Sharpe ratio. Every mutual fund declares Sharpe ratio and you should keep a good eye on it. The closer it is to number 1, the better it is as a fund. How many of you read the mandate of a mutual fund before investing your money with that fund? I'm sure most of you, 99% of you will end up saying, no, I don't read, which is true, which is absolutely fine because your investment manager is supposed to do the reading and give you the right set of mutual funds. Now, why is it important to read the mandate? Or why is it important to understand what the fund manager is going to do with your money? It's because many a times, if you watch very closely, the fund manager himself digresses out from the mandate. For example, if he says that I'm a focused investor and most of the time I'll be investing in 25 stocks, but the mandate says 35-40 stocks and he tends to go towards 35-40 stocks, it means that he's got low confidence on his own portfolio. This is a great sign for you to exit the fund before the fund manager himself loses confidence and thereby losing money. Many of you tend to believe that mutual fund investment is just about buying the top most performing fund or the best mutual fund over the decade and doing an SIP. Honestly, it is a lot more dynamic and complicated than that. One needs to do a lot more deeper analysis to figure out which mutual fund one should buy. Why don't you do this? Why don't you do a portfolio Excel to understand the top stocks, to understand the top sectors, to understand the top investments your fund manager is making with your portfolio? Maybe that's a great point to start off with. What do you think?